I'm Ryuhei Mori from Xymax Corporation. Um, I used to live in Scotland. I was belonging University of St. Andrews. I graduated in University of St. Andrews. So if my English is Scottish, I apologize. Okay. I'd like to talk about a Japan market, especially Tokyo. But I have to say, I have to explain the beginning about Japan's situation. Japan real estate investment market had just started 15 years ago, since the regulation had changed to permit real estate securitization in 1997. So these 15 years were the sort of like a foundation of the period of real estate investment idea and system in Japan. I think, and on this same period, Japan has tried to come over from long-term economic depression by creating non-performing loan properties. As a result, Japan market has been regarded as a distress market from the foreign opportunistic money. Many of them are coming into Japan market for over 10 years. Even though such money had been successful around from 1997 to 2002, afterwards the same method could not maintain successful by global economic impact. Moreover, there was a negative forecast of population growth as well. So this is, I'm saying that the past, but like still negative aspects for the Japan market. So should I say that? I'm saying until 2002, because of the non-performing loans selling to the market, it's quite cheap. And the foreign opportunity money bought them. And they were so successful. But afterwards, you can see that the vacancy rate is gone down. And also the rent is slightly gone down. That's why they made a lot amount at that time. But still, they tried to make such kind of same method, like opportunistic. And afterwards, it was okay till 2007. You know, it seems to be recovering, but suddenly it turned out. So recently, everybody realized that the Japan market is not suitable for such kind of opportunistic investment. So it should finish. It's not sort of like, I think Japan economy has matured enough to invest as a long-term stable investment. So you can see that over 10 years record, the vacancy rate is less than 10%, or say less than 9%. If compared with other global big cities, you know, this is, I think, a tremendous record. We can maintain the very stable market for over 10 years. And also, if you see that in 20 years record as well, maybe and probably Tokyo is still less than 10% vacancy rate record. So now we've got the sort of like a circle, and now where point is coming here. So many of Japanese people think that this is sort of like a bottom of the market, and now Tokyo is recovering. So actually, the vacancy rate coming slow down, and maybe another couple years. I mean, 1 year, probably 1 year. It's coming to the 3% or 4%. Afterwards, it's going up by asking rent. So this is a recovering period for the Tokyo market. And this is our original data. The above, it's the ratio of increased rent, and below is the ratio of decreased rent. And on the 2009 year, it was sort of like a 90-80% tenants decreased their rent. But afterwards, it's coming up. Like recently, more than 20% of the tenants is increasing their rent. So I'm saying that it's recovering now. And if you see that an opportunity, I separated my idea, put on the separated each other in asset type, office, residential, retail, logistics, hotel. I think regarding the space market, this is, as I say, that it's recovering, and you can enjoy the stable record for the space market, except retail stores. Retail stores is struggling to innovate their new style because Japanese people are easier to get and tired of it. So now they need a new products, new retailer in Japanese markets. So sometimes struggling in the retail stores. And the capital market is, I think, it's a sort of like a same situation as the space market as well. Okay, but the opportunity is very, very interesting. Related by maturity of CMBS is coming up soon. From 2012 and to 2016, we've gotten the huge CMBS maturities coming up. In order to finish off their CMBS, they have to sell their properties. Actually, recently, you can't find any property which is you can buy now. It's very hard to find that such kind of property, but they say that it's coming up soon because of this maturity of CMBS. So I think, as Rari-san explained, that in Tokyo should be all right. Population growth is still maintaining, and GDP is still growing. So CMBS reached maturity in 2013. There got to be an investment opportunity for you. So finally, I would like to explain about unique feature of Japan. Japanese industry is sort of like, I think it's unique. If you see that, the buildings, most number of buildings are sort of like a small and medium size of buildings. I mean, office buildings in Tokyo. And the large buildings are a little bit. And if you see that the space, the half of the space is a large building, half of it's a middle size of building. But if you see that the tenant side, you can find most of them are small and medium companies. And 69% for the employee is belonging in small and medium. So which means, small and medium size buildings are popular among such kind of type of tenants. But I think that the large size will be trouble in the Japanese industry. So they say that many new supplies coming soon in Tokyo market. But they should be, it's like a large size buildings in Tokyo. So I think large size buildings is going to be anxious about their vacancy rate and the rent itself. But still, the medium size or small size is acceptable such kind of tenants. You can find any tenants in the market. But in Japan, moreover, as Larry-san mentioned that we've got a just 2-year lease contract. You can move out anytime before you say the cancellation call, like 6 months before. You can move out anytime. So it's very seems to be difficult to maintain occupancy rate in your property. So in order to maintain the occupancy rate, or in order to maintain the your tenants to occupy the new property, you have to be very careful to having a relationship with the tenants and seeing that the rent is appropriate or not. So I want to say that the management itself is very, very important to maintain such kind of making the track record. And also, because of the disaster, we got to think about very, very deeply about earthquake protection. And this is sort of like our original data that even though I'm saying that 2 years lease, but most of the tenants are not moving out in just 2 years. The average is almost like a 6 to 6.5 years. They are staying in the same building. So yes, so this is, you can't guarantee about the fixed rent for 6 years, but you can't guarantee fixed term and the rent. But still, if you put in a well-organized management, you can get on the record for the 6 to 7 years, sort of like fixed occupancy period. And the earthquake protection, tenants now really think about that stuff. So if there is no protection towards earthquake safety in putting in a constructing building, tenants can't move in, even though that the rent is much, much cheaper than the market, but they never choose it. So at least you have to choose the building after 1981 or 1982 something. But even though the property is old, but still you need to put some construction into the building to reinforce your building against earthquake resistance. So this is also the talented by management company. Sorry, I'm just talking about Xymax Corporation. Is really a good management company to do such kind of stuff. But it's okay. As my last presentation, Tokyo's office market is still attractive, but it's very, very unique market. Probably it's very difficult for foreign people to understand the custom and also regulation itself. So I think for your investment successful, you need to choose a good partner. Thank you very much.